Growth Pod is brought to you by Genero, a leading growth agency in the Nordics. We interview marketing experts, business leaders, and entrepreneurs to uncover the stories and strategies behind profitable growth.
Today I'm joined by Sebastian Karlsson, the co-founder and CEO of Lyvia Group, a leading European technological services company. Founded just 3 years ago, Lyvia has quickly grown to include 40 companies with a combined revenues of 2 billion Swedish krona. Welcome to the show, Sebastian.
Thank you, Joshua. Glad to be here.
So I think most of our listeners are not familiar with Lyvia, at least as maybe they've used some of the services that have been produced by one of your portfolio companies. But could you give an overview of how did this all come to be? What was the business model, the strategy? What was it? How did this all get started?
So we have a background. Me and the majority shareholder, Said, who's also been on your show earlier. We have a history together. We worked together for, I think it's 11 years now. So we really know each other. And I've been a CEO of two of his software companies that he invested in. And then I saw that there was a lot of good small and medium enterprises that had good profitability and also was quite sticky when it comes to our customers' digital IT infrastructure. So I saw that there was a gap. There were some companies in Sweden also doing acquisition in this size, VTech, for example, but there wasn't that many doing it in IT. So I saw that there was a gap, and especially if we look outside of the Nordics, it's even fewer players actually doing this. So I thought, I know the space. Said has both the network, the capital, and also some of the tools needed for us to grow. And then we started out in September 2020 and did our first acquisitions actually in October, just 1 month after we founded the company, and then one in December. And that was the birth of Mirovia, who then became Lyvia after a merge with a group called 11.
And you had this very ambitious target. I think I remember reading from like the press release that went out. It was 500 million Swedish krona in profit within 5 years. And I guess you're on track to achieving that. So what was it? What was the insight that led you to have this incredibly ambitious target? Like, why did you think that it would be possible to achieve this in such a short period of time?
No, but I would say that's typical my partner and co-founder Side. That's typical of him. He just needs to have a good slogan. So he said 5 years, 50 companies, 500 million in EBITDA. That was his slogan. So he went around talking about it. And he often do this when he's creating companies. He always have this slogan that is quite catchy. And then after a while, it just gets into everyone's head. And then of course, I also put up that as a target when I did my first business plan with Dan Mirovia. And like you said, we're close to reaching 500 million in EBITDA right now with the acquisition that we have in our pipeline. So in some funny way, it actually works when you put it into people's head and you start actually live by that. If you don't do this is a failure. So I think Said and also Henry Ford, they are doing exactly the same thing.
That's really interesting because it's so unusual, at least in I think in Finland and Sweden. Do you think it's actually a competitive advantage for you as a group, that the fact that you're dreaming really big and you're able to, does that help when it comes to inspiring people or setting the strategy, this kind of ability or courage to dream really big and then also be very public about like what you're going after?
Yeah, like of course there are some disadvantages of actually being transparent and communicate that, because it puts a lot of pressure on you, of course, and also in the beginning people laugh. I remember the guy who actually created our first webpage. I met him at a bar in a private setting, and he said, when I created your webpage and I had to write that into the webpage, I was just laughing like, come on guys, who do you think you are? But also, first, if you talk about it, I think for me, quite fast I saw that this is absolutely doable. It's actually, we had a plan where we acquired 70 million EBITDA. We have some organic growth on that. We will develop the companies. Then actually 3 years in a row, we acquired for 100 million in EBITDA. And then the last year, 130. And then you if you start with the end and then you you deep dive into exactly what do we need to do to achieve the end. So 500 in this case. Then you can just put in okay, we need to do a liquidity event here. We need to talk to different debt investors, bank and bonds. We need to do an equity raise. We need to find a valuation of this, and so on and so on. So I think for me, it's a good way to work. I like to work with my co-founder's side in that way. He doesn't really go into details of how I do it. He just wants the outcome of it. So I think it's a good way to work. For me, it works fine. And maybe in the beginning I felt a little bit silly saying it in public. But like I said, now if I would say to Sai that we're going to only have or follow the business plan from now on, he would just he would scream at me, and so would the board. So I think it's really, really cliche, but if you see it and then you start believe it, and then you can actually achieve it. But it's true.
Yeah, I mean, totally. Like you just said, when you had that clear goal, you then started reverse engineering and figuring out the steps you needed to take. Okay, so you had that very clear goal and vision. Can you talk a little bit about the business model and specifically, like, why, if you could see then at that kind of early stage that this is going to make sense, this is doable, like, why was this way of working, this business model, not utilized before in at least in the markets where you're active right now?
I will say we have three stakeholders that is really important for us. Of course, first of all, the customer. So the customer, that's what makes us be able to exist. The customers actually validate our services and products. So they're the most important thing that we have. So it's really important to understand the chain of command there. Number two, the entrepreneurs and the employees, who is actually offering the services, offering the products to the customers, and then shareholders. So we're always focusing on those three stakeholders. And of course, we have done a lot of acquisitions, but it's not about acquisitions, it's about capital allocation. So I say to my companies, if I can see a customer acquisition cost, CAC, towards lifetime value, the LTV, and if I see a ratio that is 1 to 7 or 1 to 10 or maybe even 1 to 5, I would rather maybe go with allocating the capital organically and hiring more salespeople and so on. So it is not about acquisition. Acquisition was just for us to be able to head start a little bit, to have some products and services that we could offer to the customers. But then from now on, it's all about using the over liquidity that we create and allocate it in a good way. So we like to actually also, we are decentralized, we have a decentralized owner strategy, but also the same not like when we feel comfortable with the entrepreneurs, we want the entrepreneurs to also be able to use their over liquidity that they create. And that's not often the case previous to we are the owner, because then, of course, a founder, they work with dividends, so they haven't really given the company the opportunity to grow as it could. And then we can insert a big team in HQ that could help them and facilitate both organic growth, but of course also allocate the over liquidity into acquiring new companies, and new companies that create a better moat. It could be companies creating maybe a better product suite. We can also acquire IP if there's a business rationale behind that. So I think that is important to understand. And I try to always say that of course we have used acquisition a lot in the beginning, but from now on it's about capital allocation, nothing else.
That's really interesting because it reminds me a lot about how Buffett approaches this, about, all capital from excess capital from the portfolio companies should go up to the mother company because they are the experts at capital allocation. But I feel like it seems that most CEOs are very good at, it's more common for CEOs to be operationally excellent than good at capital allocation because it's such a different mindset, skill set. How did you develop that kind of thinking and skill set to be a great capital allocator?
I think I've been fortunate enough to work with one of the greatest serial entrepreneur in the Nordics the last 20 years, Sebastian Karlsson. And I've been fortunate enough to work both as an operational CEO, so I can actually build a sales force. I can take an MVP to the market, and then I've also been exposed towards capital allocation because Side has had a lot of companies in the past that worked also a lot with acquisition. So for me to be exposed towards how you can actually work with that, being able to always build a business rationale, a business case between are we going to use over liquidity to hire a new sales person, or going to use the over liquidity to buy a new company? What is the best business rationale? So I've been fortunate enough to be in in a group that has been able to do both. So that's my background for that. And then we are really strict to what we're doing. Of course, we also made mistakes in the beginning. We always iterate and try to improve all the time. But to be really true to exactly what type of returns that you want, and then if we can do, because we at HQ can help our entrepreneurs, if they find an opportunity, then we can together, because the entrepreneurs know much more about what's actually happening in their amongst their customer. Why should we, for example, acquire this company with this IP? And then they can say, yes, because if we take that one, then we can increase the lifetime value or the lifetime value ratio by 2, or with the stickiness is much higher, the net revenue retention goes up, and so on and so on. So I think if you can combine operational excellence, like you said, with financial engineering or good capital allocation, then you have a good mix of both worlds. But also if you can, because I just came from Lyvia Live, where we meet all the entrepreneurs in the group, and I said that if you have an opportunity, of course I want to have 40 units out there helping me achieve my goals of allocating capital in a really good manner. So maybe long answer, but I hope you got the feel of what I'm trying to say.
Yeah, I think it's really interesting that you mentioned that for you, you're kind of agnostic. And I feel like in so many companies and kind of management team and CEOs, you're comfortable with one. Like you may be really like a deal junkie. You just love making deals. Or you're more comfortable with organic growth. And then you tend to go towards that as opposed to just looking which tool is now most effective for us at this stage. Have you seen any kind of, have you shifted your priorities between acquisition and organic growth as the kind of market in Europe has changed a lot? I mean, or that's the first question. Has it changed a lot, the market right now with the economic uncertainty, and you see, valuations going down or maybe, how are you seeing kind of like the impact of the economic uncertainty on you, how you're thinking about acquisition versus organic growth?
I think what is happening in the private market where we always acquire companies between 1 to 3 million euro in EBITDA. That's the range. So they typically have between 40 and 50 employees. That is a standard Lyvia company. So they're not that big, and the multiple isn't changing. So even if when the market was, as during COVID, when everything was peak everything. Then of course it actually was a little bit more expensive, but we are true to exactly where we want to be when it comes to returns for the shareholders. So we will never change that. But we always work, I would say, in the same way, because I just did a case the other day when we saw that the organic KPIs are there, and then I would say it's the risk for us to use the over liquidity to actually create something that we know works. For example, a sales person more. You have the total addressable market at your fingertips, so you can actually do it. Then that's I would say we're mitigating risk in a much better way of doing that. So we are still doing exactly the same. We're always measuring what's the best business rationale. Should we do it organically, or should we do it by sending up the money to HQ and do a new acquisition for growing in another region, or to improve some of our customer offering.
Got it. Let's talk a little bit about the organic growth part, because it's quite difficult in practice. I think the founder of Vista Equity, which they invest in all these software companies, he said something like, software businesses are like chicken, or taste like chicken. Like 80% of it is the same, even if they sell completely different products. And I guess you've taken that approach because in your portfolio you've got companies that are selling very different types of or creating very different types of IT services or software. So what are the things that you look for, and what are the concrete ways that you help companies get either faster growth or better profitability?
But I think it's also important because we have a decentralized owner strategy. So we need to actually, we do depend and we rely and we trust entrepreneurs. So when we do an acquisition, and we always do acquisition bilateral. It's very, very rare when we're doing structured process, broker-led processes. But then we get to know the entrepreneur. So we know he or she, what type of characteristic they have, what are they good at, what are they less good at. But then it's up to the entrepreneurs to do the growth. So of course we study the history. How does that look? And I'm, as you can hear when we're talking, I'm a go-to-market guy. So I like CAC LTV. I like a big TAM. So I'm more into horizontal products and services than actually vertical, because I think, and I want to run my business as it is a numbers game. But then for us, it's more like facilitate and help them understand the power of capital allocation. So every time you have over liquidity, let the money work for you. So I think that is the biggest thing that we can learn them. Otherwise, the entrepreneurs, they are rock stars. They are amazing at what they're doing. It's just that they sometimes just need us to gather some data points, so they actually understand that we understand what is the logic for actually taking the next step. Because I think if you don't continue to grow and take market share, eventually you will die. So you need to listen to new techniques. You need to, for example, when an AI coming, how can we use AI? We used to see him taking market shares. Otherwise, there will be some other vendor or some other company actually trying to take our market shares. I think it's a game of growth always. So even if, of course, we want to have stable cash flow, that is the business model, we need to growth. Otherwise, we'll die and someone else will take our market share. So that is my take on everything. So to answer your question, like in 2 words, it is about capital allocation and help them understand the business opportunity that actually is there.
Got it. So, safe to say you don't get involved in kind of company culture, the people operations. You leave that to the entrepreneurs to kind of figure out for what's best for their teams.
Absolutely, and that is important because there can be 2 different companies. They have totally different company culture, but both are really, really good companies. And if you try to merge those companies, I would think it would end up in a disaster. So I think that is really important to understand. We give them operational freedom, but like I said, what we as an owner always take decision about is, like I said, strategic decisions like going to a new region or creating an IP for a new vertical, and what are we going to do with over liquidity. Those 3, that is something that is up to us and the board, together with the entrepreneur, of course, to build a business case. Should we do this or should we not do it? So they are doing 80% of all the operational decision. We make 20% of the decision that is more strategic, and I think that's the way that we need to do it. And then also we have a strategy. So every 8 companies that we acquire, we have 1 growth director, and the growth director is responsible together with the CEO to actually grow this portfolio company. So we continue to have that organic growth that we want to, that we're after. And even you are asking how about the market. Of course, the market is a little bit tougher, but we still have a top line growth this year. The profitability is a little bit lower, but we're taking market share. So we cannot always sit and just watch. Are we going down 0.2% in EBITDA or whatever? We're taking market shares, which means we will, if we want to, we could go over to profitability, but that's not the game that we're after.
Got it. Is it, as you mentioned, you're very kind of, it's decentralized. I mean, you give them a lot of autonomy and freedom. And that includes, when it comes, you're not making any efforts to integrate in terms of branding. That's conscious decision, I take it, that you're letting them run essentially as standalone units focused on their specific verticals.
Yeah, because you also need to, actually, I would say I would also include, for example, building a culture, building a brand, building awareness, building history. That is something actually you should put into the cost of customer acquisition cost. So if they have put money into it, years into it, they have an alumni group in the company and so on and so on. that is something that you don't want to take away from them, because like I said, then we would just throw away something that has cost quite a lot of money, a lot of energy, to be able to have a position on the market. So the culture and the brand name is important to keep. Then sometimes when we do an add-on acquisition, then we actually change the name and take them into one of our companies. But other than that, we try to keep the culture, try to keep the PR or the communication momentum that they have built up. And sometimes we also, of course, try to help them if they have a shitty webpage or something like that. Then we need to say something, because they need to drive customers that way as well.
Yeah, that makes a lot of sense. You mentioned kind of your target is companies doing 1 to 3 million in EBITDA. So you've seen a lot of these companies. Is there anything that kind of stands out in terms of patterns when it comes to these? This is typically what kind of keeps these companies from, let's say, getting to that, say, 5 to 10 or growing further. Is there any like common limitations or blockers that these companies are typically facing?
Yeah, we can see it. The common denominator for really good companies, I would say, is actually that they have a good sales force. Like I said, if you take market shares, if you work really close to the customers, if you have a high NPS, that is really important. And also, you need to look at the companies that you have, because if they have 30 to 60 employees or 30 to 100 employees, it is important that the CEO, he or she needs to be a CEO. They cannot invoicing or be part of projects or being too much down into the business. They need to be CEO and look a little bit further on with that type of question. And also what I think is important when I look, you need to have a dedicated sales resource. It's so important to have a dedicated sales resource and a CEO that is not billable or part of the utilization rate or anything like that. So that is in the size where we are at. Sometimes actually the CEO is also 50% of he or she's her time actually works in a project. Then it's impossible to grow, because they're too involved in creating customer value instead of creating company value. And we have done in the past, we have done acquisition where the CEO hasn't been only CEO, but then we try to develop the organization so we actually can do that. And sometimes we can take a hit, or we include it in the adjustments when we acquire them. But if we want to be able to grow, we need to have a dedicated sales resource, a dedicated CEO.
Do you find typically that the companies that you acquire, if they're not in that position, do they respond well to kind of your vision, your pitch? Because you have a very clear operating model, and how is it kind of an easy sell to get these entrepreneurs on board with joining Lyvia?
I think if you're an entrepreneur and you want to join us, I think there are also some common denominators there. For example, it's often an entrepreneur that, because if you look at them in a more like a portfolio management eyes, they have all their money into one asset that is illiquid, right? So we can actually say, listen, you should freeze some liquidity, but you can also be able to continue to grow and stay on board on your company. So it's often the entrepreneurs that think, okay, I've done quite a good job. I want to have some sort of reward for that, but I want to continue to, because I love this business. I love the people working here. I would love to be able to actually also give the business an opportunity to grow, because they also know that they have always paid themselves dividend instead of hiring a sales guy or acquiring a company. So the pitch for them to actually get some reward, be able to give the company a chance to see what it actually can achieve. And also I hope and I think they like a little bit also that a lot of us, me inside, we're coming from an operational background. I've actually been in the southern part of Sweden, in small towns and knocking doors and actually sell my own product. So I think that's a little bit intriguing, because we're not the typical Stockholm financial district type of guys.
Totally. I could see that being a really compelling pitch, and especially now as you have a very extensive track record of showing like we've done this. It's not just talk. We've done this for other companies, and we can do that for you. Have you noticed any challenges when it comes to going abroad? Like you live as a Swedish company, and you're now active in like Poland and Spain, all these other countries. Has that been easy or challenging?
No, but I think actually Sweden, Stockholm in particular, we have a quite good reputation because, especially on the B2C side, Spotify, Klarna, iSettle, Skype, also a lot of music artists and so on and so on. So I think we have a quite good reputation still in the rest of Europe. So I think that part hasn't been that tough actually. I was in Spain like 2 or 3 weeks ago, and they were so extremely proud that they had a Swedish owner because they think about all the Swedish stuff like I said, Spotify, Klarna, IKEA, and so on and so on. So I think the entrepreneurs from the past are helping us, the entrepreneurs now in the future. So I think that's good. But then of course there are every market has their pros and cons. There could be different things. It could be like legal issues, it can be accounting issues, it could be harder to collect data in some countries compared to others. So all of the market has their advantage and disadvantages. But so far, it has been quite an easy transformation. I was a little bit afraid of that when we started, and when I say this, I'm really humble because of course, like we have acquired 40 companies. Not everyone has outperformed the market. Of course, we're doing mistakes all the time, and we need to learn from that. But so far, I would say the outcome from the outside of the Nordics has been really good.
I think that's really good encouragement for Swedish and maybe also Finnish. Finland, unfortunately, we don't have the same reputation. It's not, especially when it comes to consumer side, it's more industrial but
yeah, but I think
maybe we can ride along.
No, but I think Finland, when it comes to B2B SaaS, for example, they have a company called Dream Broker that is also actively in all of the rest of the world. They have a company called Vainu, who is doing sales intelligence. I think they're quite good when it comes to B2B products, but often it's not B2B products that's go through in the press or the media. Everyone writes about Spotify or things that you can actually it's tangible for you as a private or consumer. But I think Finland, maybe because of they have this, you know more than me about this, but they have techies that the government is supporting them to actually continue their growth. So I think on the B2B side, I think Finland is strong.
Yeah, that's very true. I want to quickly just touch upon the acquisition part because we talked about that a little bit. But I'd love to, if you could divulge. I'm not thinking you're going to divulge the entire kind of secret sauce, but you've been making. I mean, you made the first acquisitions in end of 2020, and now you're 40 companies. So quick math, it's on average more than once per month, which is insane, considering the stats, which is like over 50% of acquisitions don't work, or they destroy value rather than create. So anything kind of like, how are you able to do this essentially at this scale, rate, and successful?
Now, I saw that statistic that you're referring to about the success rate when it comes to acquisition. But if you break that into different parts, if you have it as a strategy and not doing like one acquisition then, actually the one who has it as a part of their DNA, they are actually more successful than the one who is doing it from time to time. But I think when I build my company, I need, because I'm a control freak. So if I don't see the numbers that are correct, then I can't really live with myself. So when we're doing acquisition, I did exactly the same. One thing is like, for example, if I would only do acquisition through brokers, then I would get like 0.1% of the companies out there, right? Because it's 0.1% of the companies is actually up for sale at every given moment. And I want to acquire the best of the best, so I want to actually cherry pick the ones that I would like to acquire. So then we need to do an outreach, we need to do bilateral processes, and we need to understand, okay, how many first meeting does it actually acquire to sign an LOI? How many first meeting with a potential acquisition target do we need to do to create an LOI? And then, of course, we're doing exactly the same. I think one of the secret sauce, if I would show you our CRM and the amount of data that we have in it, and how precise and detailed we are with everything from the marketing automation before we do a reach out to the process when we're doing a reach out. We have an acquisition the other week that actually took 1,000 days to achieve. So we work with them for 1,000 days to be able to acquire them. But after a while, we know exactly their business. They know us. They know exactly our disadvantages and our advantages, and that's how we do it. So we know exactly our drivers behind an acquisition. We know that X amount of meeting leads to X LOI. We know that this many outreach leads to this amount of meeting in percentage, and we know the time between everything. So if you would say to me, look, Sebastian, I have 1 billion euro, how fast and at which return can you actually be able to allocate those? I can almost, if you just give me 1 or 2 hours, I could take that data and show to you. So I think I need to build something that is forecastable, and that's also why we moved from the Nordics quite soon, because we have around 1,000 to 1,500 potential and interesting candidates for acquisition. And I said to the board straight away that we need to go to a new market, otherwise the total addressable market for doing acquisition will soon actually be full for us. So for Sweden now, there are 1 or 2 companies coming up every year, but we're focusing more and more. And if you see the acquisition pipeline right now, I think 80% is outside of the Nordics.
That's such a good point, that the reason probably why most acquisitions fails is it's companies doing it like the CEO doing the transaction might be his or her first transaction, but you guys are doing them monthly, and you built this pipeline and this understanding. I think that must be such a huge competitive advantage in negotiations, because you have such a good understanding, pulse on the market. You know what you're paying for, you know what you're willing to pay, and you're also willing to walk away from deals if the conditions or price isn't right, because the scope is just so much wider than some of the other potential buyers.
Yeah, and that was a thing in the beginning, and because we are human beings. Even if we said, okay, we're going exactly doing this by the playbook, then in the beginning, when you want to grow, of course, you're a little bit more eager to do some decision, and you need sometimes to do and take some risk and do decision. For example, we did a lot of decisions that was strategic based on when we did the bond, for example, because that bond was our ticket to actually grow to where we are today. So there are sometimes you need to take good strategic decision when it comes to taking risk. But then now, as we have grown to the size where we are today, I would rather just sit. My board wouldn't like that, but I would rather sit on my ass one full year and don't do any acquisition if it's actually outside the scope where we are. And I'm saying that today. I wouldn't do it 1 year ago, 2 years ago, but now I have the operational balls as a CEO to actually say that it's so important to find the right candidates. Otherwise, we should actually pass right now.
Yeah, totally. I mean, there's the old kind of like adage or quip about psychology is the biggest competitive advantage in investing, because it's not like psychological edge is better than an informational or whatever edge, because it's so easy to get carried away and do things that you shouldn't be doing. I want to talk about something pretty spectacular, which is earlier this year you secured a 1.6 billion Swedish krona. So that's like maybe 150 million euros, something like that. Not sure what the exchange is.
The currency has been weak, but it's actually been getting stronger the last week, so something like that. Yeah.
Yeah. A bank loan. So I'd love to talk, if you could talk about how that came to be. Obviously, this is very unusual in the current kind of economic environment. First of all, that someone would do that, and second of all, that the banks would agree to that. So can you talk a little bit about that, how it came to be?
No, but I think the relationship with those two banks, Danske and DNB, is, like I said, we are extremely proud, and we're so glad to partner up with those banks. They've been pragmatic. They've seen the vision where we want to go, And also when we actually did our tap issue for the bond, when we were increasing the amount of money from the bond investors, directly after that, because we saw the interest going up, so it's actually quite expensive with capital all of a sudden. Then we started to work with the banks, because you can always get capital at some cost, of course, but if you look from EBIT and down, and you have too much interest cost, then it's not much left for us to feed the system. So we work with that. I think me and Danske, I was there presenting every quarterly report for like 1 year. We worked and talked to Danske, DNB, for quite some time. And I just said, look, we're not there yet, but I still want to just show you and expose my product or my idea and my vision. And then I think we were quite aligned when we actually started to do the real talking, when we had done the merge, when we secured the economy function in the company, in the new company, and when we had the numbers, I felt quite comfortable because the relationship was that good. So, like I said, Danske has been with us all the time, and then actually during the pandemic, I listened to this Norwegian entrepreneur, Petter Stordalen. He talked about that his relationship with DNB was the thing that actually saved him during the pandemic. So when I listened to that, then I thought, like, DNB and Danske, I cannot find a better partner in this environment. And like I said, milestone for us. So proud of it.
Yeah, it's a huge achievement, and it makes a lot of sense. You mentioned there the importance of relationships and building that credibility and trust early on. It's not something you just do overnight, for sure. So now that you've had this, you got that money. What are you looking at right now? What's kind of on the horizon? Any kind of big targets? Any changes in the market that you're looking to capitalize on? Let's say, for instance, AI.
No, of course we're looking at that. I think AI will transform some part, of course. I will be stupid if I say not, but I think still it will be people who can actually work with AI are the ones that are going to succeed. You're not going to replace people. I don't think that. But we will continue to do exactly the same thing as we have been doing before. We have the same targets, 1 to 3 million EBITDA, but we're looking to acquire more own IP, not only third-party IP and expert service company towards that. We're looking for more and more own products, own software. Like I said before, our acquisition pipeline, we will do acquisition the 1st of December, the first business day in January and first business day in February. So we are lining up the targets right now. So we know exactly the companies. So we're just lining them up. And then also, of course, to plan and take the next step for the existing companies that we have. Because that the market has been tough. We are so, like I said, also we're proud that we have a top line growth, but the profitability is a little bit lower. But still, we have taken market shares in this environment. So now we need to get back to the percentage that we had, can we say, pre-inflation rise.
Got it. So essentially, it means maintaining that disciplined, focused approach on executing a strategy.
Yeah.
I'd love to ask just a couple of kind of personal rapid-fire questions. Number one, you have a very strong background, and you mentioned this a little bit. You have a very strong background in sales and business development. So how has that kind of shaped how you currently as a CEO of Lyvia? And do you think it's a really useful skill that more people should try to acquire?
I think it's everything is sale, and most people don't understand it. But like, for example, if you're looking for funding, then you need to meet all the PE funds in the world. If you're looking for a bank, you need to have contacts and relationship with all the banks. You need to put every sort of, I would say, ask that you have as a company or as a leader. You need to put that into the CRM, honestly. So everything is a numbers game for me. The more you expose your idea, your vision to people, the higher the potential of actually something happening. And I think that's something that I want to create as a DNA and as a culture in Lyvia. And also what I'm trying to, when I talk to the entrepreneurs, that is what I try to, not enforce on them, but just say, listen, you have all the other skills because they really do. They're amazing at delivering their product and services, but sometimes they lack a little bit of sales competence. And just break it down for me. See how many customers last year, what was the cost of your salespeople? That is the CAC. Help them to actually realize that. And then we can help you with gathering the data the last 5 or 10 years in your company. And then we can see the lifetime value of every new customer. And then we can start to working with those KPIs. And I hope, both when it comes to the development of company and also when we're doing the acquisition the way we're doing, I hope that comes from us. And I think and I know that's coming from my sales background.
Yeah, totally. Second question. Lyvia has been growing at kind of like this, insane rapid growth rate for the last 3 years. What's been the biggest challenges for you personally as a CEO of this fast growing company?
I think I have this analogy when it comes to like you have a waterfall just falling down and the company can actually is able to hold a volume of X liter. And you need to be able to not only take everything in your own bucket, but actually be able to take the water and start to delivering it to other people in the organization. So the volume that you could hold increasing all the time. Because otherwise it's so easy that the C-level management, they take a lot of the workload and you're not able to actually delegate it further down. So I think that part has been something that you need to grow into because we're quite big now. And the other part, and that is my co-founder's side, he's always been on my back because he knows that I'm quite good at when it comes to operation and sales and business development. So of course, when you're good at something, you always want to maybe go down a little bit and be helpful. But what I should do is actually to expose my vision and my strategy and the company to potential investors. That is my biggest job right now is actually to be able to please stakeholder number 3, the shareholders that I started off this pod with. So I think those two things has been the most challenging so far.
And final question, do you have any specific or any favorite resources, whether it's books or podcasts or people that you go to kind of maintain your edge, whether it's about capital allocation, sales, operations? Like how are you making sure that you yourself stay at you're constantly up leveling?
But I listen to of course a lot of podcasts. I try to always go to different conferences, especially like startup conference. That's why I'm going to Slush, because I just like to understand everyone who is creating revenue. So I would love to go to a conference where only chief revenue officers would meet and talk about how they actually increase their revenue stream. So I try to be on top of that. But other than that, I read quite a good amount of literature. The last one, and I'm really fascinated, is a Danish guy called Rasmus Ankersen. He was the sport director of Brentford and also FC Midtjylland. Brentford has actually moneyballed soccer or football, as you say here in Europe, and both with Brentford and also with Midtjylland. So he's really interesting when it comes to breaking down data. And right now I'm exploring outcome bias and different examples of outcome bias. So like sometimes, for example, the outcome can be fantastic, but are you actually doing the correct thing? So I try to also incorporate and implement that into Lyvia, that are we doing the correct things? Because even if the outcome is good or sometimes bad, you can actually be doing a really, really good job or a shitty job. So looking more into the details what we're doing. Just to take an example, we've just done quite a lot of acquisition. Everyone is saying good things that we are good right now. But if I look, for example, in our acquisition pipeline, for some of the regions when it comes to meeting, we are not doing exactly what the outcome says, for example. And you see that often and often, and you need to you need to always remind yourself that you're not as good as people say that you are when things is going good, but you're not as bad as people say when things are sloping a little bit. So you need to understand and look, are we doing the right thing day to day? And the outcome bias part and examples of that also in business life. I've been exploring that quite a lot on the last time.
Yeah, that's really interesting because I think it's can be a real competitive advantage, that kind of self-evaluation, critical assessment of your decisions. I just happened to finish reading a book called How to Decide by Annie Duke, I think it was. And she talks about this a lot, resulting that we judge the quality of the decisions by the quality of the outcome, which, as you mentioned, is completely wrong. Yeah. But we do that as humans.
Every month since we started, I've always gone through the processes, like post-acquisition, pre-acquisition, during acquisition. I sometimes do a review from the companies. What was your feeling about the acquisition? Because if you're not feeling good during the acquisition, even when we do the due diligence, then how can we actually be effective the first 100 days? And how we're working with all of these different steps in our processes and go through them every month. Can we do something better? Can we do something better? And like I said, never be satisfied by the outcome, but always look at the processes. Are we doing the correct thing day to day?
I think that really summarizes, because before our conversation, I was looking at, wow, they did 40 acquisitions. Like, acquisitions are so hard. How are they doing all of this? And I think what's been consistently coming here is that it's about process and disciplined focus, and that kind of constant evaluate, like trying to optimize and improve what you're doing. And so there's no secret sauce. It's just a lot of hard work, smart people working really hard for a long time to create this operational excellence inside the company.
Yeah, I agree. Sometimes I feel like Sisyphus, just rolling the stone up the hill and doing the same thing the next day. But that is also something, like, you need to have progress. You need to move, even if you have everyone has bad days. You're a little bit pissed off about the decision, about some outcome, and so on and so on. But then you need to just continue. There is always a solution somewhere. So you just need to continue to push that vehicle forward. And that's what I said. That's why it's so important to keep on taking market shares instead of just being fat and happy, because then someone else will take your market shares.
I think that's a good takeaway, good place to end this conversation. Sebastian, thank you so much for coming on. It was a true pleasure to learn from you. If people want to follow you and Lyvia, is LinkedIn, or are you active somewhere else?
Yeah, LinkedIn, Sebastian Karlsson. Lyviagroup.com is the webpage. But you can always add me on LinkedIn. I accept the most. Just if you have a good in-mail message, then I will accept your friend request or your request.
And if you're running a IT services company doing 1 to 3 million EBITDA, you should probably reach out. Although
call me.
Although your company is probably in Lyvia's CRM already.
Yeah, they are.
By the sounds of it.
They are.
Thank you so much, Sebastian. Best of luck with everything, and have a great rest of the day.
Yeah, thank you for that, Joshua. Nice talking to you.
Thank you for listening. You can find all episodes of The Growth Pod on Spotify, YouTube, and Apple Podcasts.